All right, I'm here today with Matt Plumer out of Las Vegas, Nevada, back at the Co-Sponsor podcast. And we all know as real estate professionals, the number one thing that we all need to do is generate leads in the real estate space. But what comes after leads comes commissions. And then you get this big bulk of money dropped in your bank account, and typically you blow it on a new car, a house, going out to the club, going on vacation. And then what happens at the end of the year? We all get this big fat giant tax bill, and we're like, holy crap, I didn't save any money. And Matt is actually a financial coach that specializes in this specific category. So here we are rolling into the new year, and I thought it'd be great to have Matt on and talk exactly about how agents like yourself can strategically plan and, let's just say, maximize the money that they're actually earning, so they're giving less to the government and giving more to themselves, so therefore they can go buy the bigger house, more cars, and all those fun things that come in between. So thanks for coming on today. um I guess let's just jump right into it. Like, what do you think is like the number one mistake agents make in their business today that they could easily avoid when it comes time to pay taxes or financials in general?
Yeah, so Jesse, the number one mistake that agents make is actually happens before any of the real estate transactions. It's making a decision on how they're actually going to exit the transaction treadmill,
Mm,
right? As investors, when we're investing in something, the number one thing we want to try to figure out is how are we getting out of the deal? So as a real estate agent going into 2026, we set these goals of I'm going to sell 24 houses, 36 houses, 50 houses, 100 houses, whatever it is. But when is that ever going to end? So figure out, identify exactly what your, I call it your Oz. What does your Oz look like? And then work your way back. Hey, I'm going to exit transactional real estate in 2 years, 3 years, 5 years, 10 years, 20 years of what that might be. What do I want life to actually look like? And then when that comes back to, I'm still going to sell my 36 houses this year, understanding the map and creating a money map of when 10,000 or $15,000 commission comes in, what happens to that money before it hits your bank account. And so if you have like a mindset thing, it's like, hey, when do I actually want to stop selling real estate? And then if you have a tactical thing is what's going to happen to this money and who needs it before it actually comes in and hits my bank account.
gotcha. So, like, let's just say someone gets a $10,000 commission check.
Mhm.
How should they be looking at that money?
So again, a mistake is that real estate agents think that that is their money. And if they have their businesses set up correctly, that is truly, Matt Plumer real estate commission, right? That $10,000. And so what I want you to do is identify who are the roles and responsibilities that get that money. First of all, if I am the owner, I need to pull out profit. I believe one of the biggest mistakes that, or one of a challenge that agents have is you make $100,000 or you make $1 million, you have $400,000 of expenses, you have $600,000 of net profit at the end of the year, right?
Yep.
Okay. Two questions. One, what happened to the 600 grand?
Hmm.
Two, where's the 200 grand you owe the government on the $600,000 you just made?
Yeah.
And so what we do is we flip the script and actually pay ourselves first through the methodology of profit first. So if I'm a solo agent selling real estate, who owns the business? Well, I own the business. So I'm going to take a slice of that $10,000 for myself as the owner.
Mm.
Next, who actually did the work? Well, I did the work. So I'm going to take another slice of that $10,000 for paying myself for actually going out and doing the lead generation and doing the open houses and writing the contracts and all of the things. And so now if you pay yourself as the owner, let's call it 5%, maybe 10%, and then you pay yourself for doing the work 25, 30, 40, 50%, who who's the next organization or entity that needs to get paid? The government needs its money. So
Yep.
we slice off 5, 10, 15, 20% of the gross revenue for the government. We now leave ourselves 15 to 30% to actually run our business on. And so when you run through that methodology versus, hey, I've got $10,000, let me go hire this coach or go buy this marketing system or go do that stuff. Is there ever any money for you or is there ever any money for the government? No,
Yep.
right? So what we do is we reverse engineer how much money do you actually want to make net. We work that into how many houses do you want to sell, do you need to sell? What is your odds? And so we really truly start and reverse engineer everything versus, oh, it's January 2026. I sold 30 houses last year. I want to sell 36 houses this year.
Gotcha. So how are you advising agents to track all of this? Is it through like a bookkeeping software? Is it just like in an Excel spreadsheet? Like are agents keeping their receipts in a Ziploc bag and then turning them in at the end of the year? Like talk to me about this situation.
Yeah, so think big, go small, trust the dominoes will fall, right? We want this awesome type of system or software, but at the end of the day, if you just keep track of it on an Excel spreadsheet, you're going to be so much further than if you're not. Um, I actually coach people through a banking system that helps you organize the money. I think the two biggest challenges that real estate agents have is financial organization, or sorry, inconsistent income and financial disorganization. So, hey, can we take the $10,000 and plan that? I use a software called Every Dollar to help plan that money,
Oh, nice.
right? It's everydollar.com. It's a software. And then also a banking system that helps you organize your money through multiple accounts with no minimums, no fees, called Relay Financial. And so when you have those two platforms and you plan your money before it comes in, and then when it comes in, you allocate it to profit, owner's pay, taxes, and operation expenses, like you are so far much further ahead than if you just $10,000 comes in and you start writing checks to, Zillow, Realtor.com, your car payment, and your mortgage company.
Yeah. What do you like? Let's back this up a little bit. Like, where do you think is the easiest thing for agents do to like save money? Because, or not save money, let's just say I could be save more money. So like I think of like bookkeeper tracking all my expenses. I think of
Yeah.
like creating an LLC, um, maximizing the tax strategies that are available for real estate agents. So if you were to like say, this is the first thing, this is the second thing, this is the third thing, and because I talked to probably 90% of the agents don't have anything set up, and I'm sure you see the same thing.
Mhm.
So what would you advise them are like the first three things they should be looking at doing?
Well, so everything starts again, if we look through the lens of how do we, after we're going to go make money. So once we do that, what's the filters that it has to go through? So And obviously, if we don't have the right filters, we're going to overpay in taxes. We know that. If we don't have a plan for our money, we're going to wonder where it went, whether it's spending at home through the, groceries and eating out and driving, fancy cars, or we're going to overpay in the government. So if we start at the business, everyone should, again, not tax advice, but just kind of you and I ripping is we need an LLC and we need to file as an S corporation. That's going to automatically eliminate 15.3 of self-employment tax, 15.3% of self-employment tax. So if you make $250,000 and you spend 150 inside of your business, that gives you a net income of $100,000. And you are paying self-employment tax. So you're filing as a sole proprietor, right? Or as an individual or a sole proprietor, you're going to pay $15,000 in self-employment tax.
Pause right there. If you're not an LLC, you're paying that on your business and as the employee, right?
Correct.
So agents that are listening, if you're not set up this way, you might not know this, that you're actually paying double. So if you're as an LLC, you're only paying on that one time.
Yeah. So if you LLC file as an S corporation
Yep.
is going to eliminate 15%, it's 15.3, but 15%. So every 10,000 or every 100 grand that you make that you're not filing as an S corporation is costing you $15,000.
Gotcha.
So that's number one. And then as you are filing as an S corporation, one of the requirements is you have to pay yourself a reasonable salary, which then reduces your business expenses, right? So what's a reasonable salary for going out and selling 30 houses a year, right? 40, 50, $60,000 of running that business. That's not all you're going to make. But
Yeah.
again, that's a big challenge that a lot of people have is like, oh, hey, I pay myself $60,000. I'm like, you work 4,000 hours a year. Like, so like there's got to be a distribution plan, and that's where profit first and actually planning this money. It's like, hey, some of this, that 30, 40% is going to come as a payroll. Some of that's going to come as a distribution. Some of that's a quarterly distribution and profit. And so over the course of the year, we actually pull the money out of our business and put it into our personal account so we can then go and give and invest and do all of the things that are also going to keep putting a downward pressure on our tax liability.
Gotcha. And then, like when you pay yourself, because with an S corp and that type of filing, you have to pay quarterly.
Mhm.
So, do you advise like setting up like a quarterly distribution amount? So, like, say it's 10,000, 10,000, 10,000, 10,000 4 times. Because the one thing I don't like having is a big giant bill at the end of the year. So I try to like take it up a little bit extra. Like, what's your preference on
Yeah,
that?
so if you're making, $100,000 a quarter, right? You're making 400 grand a year. And we have determined that, let's say we're saving 20% we're running through payroll. So obviously we have contributions going through payroll into the tax system. But we're going to save somewhere between 10 and 20% of every check in an actual tax holding account,
Hmm.
right? That's going to be that there's a couple of steps, and we'll get it over to a high yield savings account so we can get a little bit of juice on that money. But ultimately, our CPA the year prior is going to say, hey, based on you making $300,000, you're going to have a true up of 110%. So your tax liability is going to be this going into 2026 or into 2027, depending on when you're listening to this. And that'll be broken into quarterly payments, and that might be $14,000 a quarter. Well, if you sell 100 grand a quarter, right, and you set aside 20%, there's 20 grand a quarter going to be sitting in that tax account that you can just write a 10 or $20,000 check out of that account. And now, Jesse, it's not sitting in your main account. It's not sitting in your operation account. It's not sitting in your personal account at home with you and your spouse.
Yep.
It's sitting over here to actually just go to the government. And so it's like every time we write that quarterly check of $15,000, it's like paying a light bill. And so we've removed our emotion of like, I just wrote the government a check for 15 grand. No, we set that aside before it even comes in. It's not your money, it's the government's money. Now, over the course of the year, we implement strategies to put a downward pressure on that. But the first step to putting a downward pressure on, so many times I come in to have conversations with people like you, Jesse, who's like, hey, how do I eliminate taxes? Well, the first step is, have you saved enough for taxes?
Yeah.
Because the money that we're going to save in taxes comes out of the money that we actually have saved,
Yep.
right? And because we just did that, we had about 15 grand in our tax holding account for the last quarter. I wrote a check for 7,500 bucks to the government for my estimated taxes. Had a conversation with my CPA. He said, "We're good. You might have a little bit in April, or if you file an extension. But again, we have fulfilled our obligation. I took the next $7,500 home, and what did I do? I funded our IRA. What did that do? That put a $7,000 deduction on our tax liability for 2025.
Gotcha.
So, like, I know we just said a lot, but also if you like think through it, it's like the first step, if I want to reduce the amount of taxes, is I have to be financially organized and I have to save enough for taxes so I have money to go put a downward pressure on my taxes.
Gotcha. And what about and then so what's the third thing?
So we have entity setup, we have a
Yep.
path of money,
Yep.
and then we got to have a budget.
Okay.
Like now, there's nerds out there that are like it's called a budget, and then there are the free spirits. It's called a budget, right? And so it's like, but all it is like, hey, $10,000 is coming in this closing on January 3rd. what am I going to do with this money? And how much am I going to pay myself? And then of the money that's coming home, what are we doing with it? How much are we giving? How much are we saving? How much are we investing? And how much are we spending? And how much are we enjoying? Like it's not a bad word. It's just I think where people get tied up around the word budget is that they're afraid to actually realize how much they're spending in life by default versus design. And
Gotcha.
so it's such a great time of the year to actually go through and understand what is your required monthly expense, what is the amount that you would love to spend, and then based on that, like how much do you want to pay off debt this year? How much do you want to pay? How much do you want to save and invest? How much do you want to go on a trip? And so you start planning that odds that we talked about year in and year out to be, Melinda and I just did it in Palm Springs. We came up with a spreadsheet. It's like, hey, we want to go on this many trips. We want to invest this much. We want to pay this much towards the house. Like we came up with a really big number that'll tell us how much of revenue we need to do this year.
Yep. Yeah, that's great. Because I think a lot of agents like hear this and they're like overwhelmed and they don't even know where
Yeah.
to start. Like, you know, I think tracking your expenses is probably the craziest thing agents do. So, what would be a simple solution? Like, if you're an agent out there right now and you were like, how do you do your, and someone's starting from scratch, they have none of
Mhm.
this set up. Like, how much should an agent pay to get like someone to manage all their expenses so that they don't have to track their receipts, to
Yeah.
maximize all the tax savings, setting up the entity properly? Like, do you have a program that an agent could jump into where you could do all of that? And like, what does the monthly bookkeeping look like?
Yeah, so I think if you look at it's like, if you're an agent that's you're selling 10 houses a year, I mean, you're making 100 grand, right? And if you just kind of look at that, it's like, all right, so we want to get to $250,000 a year. That's going to allow us to have this type of life and, retire or do whatever. I think you look at it in percentages to say if my financial team, right, between coaches, CPAs, bookkeepers, is probably somewhere between 2 to 5% of my top line revenue. That helps me eliminate 50% of my tax liability. I think that is a good rate of return, right? So if you have, you're making $250,000 a year, let's
Yep.
say, or 200 grand a year, 5%, that's 10,000 bucks, right? So I'm gonna invest $10,000 into my business through coaching, conversations, proximity, bookkeeping, and CPAs, right? And that might be a little bit higher for some people. It might be a little bit lower for some people. But I think if that's a normal thing, hey, I make 200 grand, I'm going to take 5% of that and I'm going to invest that into myself. Here's the beauty of that, Jesse. You don't lose the information,
Yeah.
right? So you learn it year one, right? You apply it for the next 25 years.
Yep.
Right? And so I just think that if you look at, on average, bookkeeping is going to be, it's a $3,000 to $5,000 a year expense if you outsource it. There are going to be some people that'd be like, I'm not going to spend $5,000 on bookkeeping. Well, then you do it, and it's going to take you 10 hours a month
Yeah.
times 100 and times 12 months. That's 120 hours. How many leads could you have generated in 120 hours?
Plus, you don't know if you're coding it right. You don't know if you're
You don't know if
taking.
you're coding it right and all this stuff. So it's like it's more of a cost of doing business. Now it's not a cost of goods sold, but it's a cost of doing business. So if you're like, hey, my bookkeeper's 5 grand, up to 5 grand, my CPA's $3,000 to $5,000, my coaching's $3,000 to $5,000, you're in that $12,000 to $15,000 range. But all of that is an actual investment back into the business that helps you put a downward pressure that you're not sending the government 30%, you're sending the government 14%.
Exactly.
And so now you go make 400 grand, you would owe 80 or 90 and you write them a check for 35 or 40.
Yep.
It's a pretty good use of $15,000.
Exactly. And I know like a lot of this conversation is like about like the today thing and agents just getting started, but like obviously at the end of this road, like agents want to exit real estate, right?
Mhm.
So like we're obviously saving money for taxes, preventing paying taxes. Like my thoughts should be is like they should be putting that savings towards their 401k. So do you feel that like maximizing your 401k annually is probably like one of the best benefits as an like a real estate professional?
Yeah, your traditional IRAs
Yep.
on the personal side, that you can easily, most real estate agents make um, the amount of money that limits their ability to go directly into the Roth IRA. So if we just kind of talk personal, like you contribute to your IRA, which puts a downward pressure on your tax liability, but also then you can backdoor and convert it to a Roth where it grows tax free. It's a planning thing. But again, we got to put 70 now 2026, we can put 7,500 bucks towards our IRA.
Yep.
You can do a 401k or you can do the mega 401k. Depends on, again, this is an entity structure to where you can put in anywhere between 23.5 personally, 23,500. It might go up in 26. It might be 25,000 in 26. But now you're, as the employer, you can contribute. And so then it becomes a percentage of total gross revenue that you can. I mean, there are scenarios to where you can put 50 to $75,000 a year into a 401k.
Yeah.
Which again, a part of that is personal, part of that is a business, and the business is the deduction. So, if you can put 30 grand into your 401k, you're gonna get a essentially a 30% savings on that on how much you pay in taxes.
Yep.
Um, your IRA, your HSA, if you qualify for an HSA, end up families can do $8,550 a year. Um, Obviously, you look at putting yourself, putting your spouse, putting kids on payroll if they work inside of the business are all ways you can put a downward pressure pretty simply on your tax liability.
Yep. Yeah, I'm like a firm believer in that. I review my stuff every year. So we max out my wife and I's 401ks um with the match and all that stuff. And that's like in 65, that's going to lead to being a very significant amount of return
I
into
mean,
our
it's millions and millions of dollars.
exactly. So I think agents don't really understand like how impactful these are small hits and like no one likes saving money. Let's just be real. Like
Yeah.
everyone loves spending money. However, the way I look at it is Jesse today is working for Jesse at 65 and I just like making sure like in working with professionals like yourself that I'm like covering all my bases because before that, like for 3 years straight, when like there was the 100% cost seg and the rates were in the threes, dude, I was gobbling up real estate and cost segging, and I had credits galore for 2 years. Uh,
Mhm.
and so there's a lot of different strategies, but you can't like expect like a get rich quick thing in this financial sector because it is a slow build.
Well, and especially with real estate agents and the thing they know is real estate, which
Yeah.
A has the slowest appreciation,
Yep.
which takes the most amount of money to start, which again, for traditional buying rental properties. And so it's such this massive rock that you have to push forward every single day and every single month. Um, and in today's world where prices are high, interest rates are high, the squeeze that you're getting, I mean, it's a 20 to 30-year play on one rental property versus, hey, Jesse, can we carve out $625 a month so we can open up an IRA and just go buy Vanguard index funds for the next 12 months? Can we just start there?
Exactly. What if an agent wants to learn more about you, like number one, you're at eXp. So
Yep.
if an agent wants to reach out and partner up with Matt or learn more about you, like where would be the best place for them to go?
So on the web, mattplumber.com
Okay.
is the easiest way to connect. Instagram, Coach Matt Plummer. And then I did write an ebook, mattplumber.com/ebook, that does walk you through those 5 financial mistakes that
Okay.
agents make. That you can, it's an easy way to get into my world.
Gotcha. And what do agents get in your organization?
They get the financial wherewithal. We have the conversation, right? I think that's the most important thing is inside of my wealth department, which is my paid group coaching program, is a safe place for people to have the conversation. When you partner with eXp, it's the automatic default. It's the first thing we're talking about is, hey, how many houses are we going to sell? talk to me about your business finances. Talk to me about your personal finances. Like it's having the conversation without like the exchange of money, because I think that's where everything starts is needs to start with the money. And so if you're going to align with eXp, whether it's, Matt and Jesse or whoever it is, I think the first thing we start is money because everybody's growth minded. And from there, it's the mentorship, it's the walking, it's the proximity without the necessity of like, hey, let me exchange money for this. It's actually you're exchanging proximity for that.
Awesome. And if you could give anybody one last tip before we bounce off of this for the future, what would it be?
I think there's three steps to a transformation: awareness, decision, and intentionality.
Great.
And the very first thing that I want you to do leaving this podcast is start with awareness and understand that those are just the facts and the facts are truth and the truth will set you free. And the mindset is I want you to have is it's okay to be where you are. It's just not okay to stay there.
Love it. Fantastic. Well, thank you so much for coming on today and look forward to a great 2026.
Awesome. Thanks, everybody.